I keep running numbers to find out what the prices of Teslas will be if we're in a recession. We end up with a Model Y long range at just $45,000 with a 10% margin. We just heard that the Model Y will currently not qualify for the tax credit unless it was under $55,000 or had the third row of seats. So I think it's inevitable that it will likely come down to under $55,000. Well, that would then mean that Tesla could sell a Model Y for $45,000, and which would be $37,500 after the credit, and still get a 10% margin. However, in the US, Tesla may not have to drop the price that much. $55,000 is low enough to get the tax credit still, which would then generate around 27% margin, and the consumer would only have to pay $47,500 for the vehicle. Wow, a Model Y for just $47,500. That does sound like a bargain. Or at least you might think. In March 2021, a Model Y was just $49,000, but the waiting list was only 2 to 4 weeks. And back then, Tesla were not even making that many. At I guess 50,000 a quarter? Perhaps Model Y production in Fremont is now closer to 65,000, and Tesla has a Q1 target of 75,000 for Texas. That would mean 140,000 Model Ys, or about 3 times as many when Tesla sold them for $49,000 in a regular economy with lower interest rates. We've now seen demand drop across the board. I don't think there is any denying this. All markets are now saying deliveries will be in January. Yes, we might have thought the fact the US consumer gets $7,500 off their car if they wait until next month would delay a lot of purchases. On the other hand, they just got that discount this month, and supercharger miles. And the discount was instant for everyone, not tax returns, and applicable for every car, of which it is not for the Model Y long range currently. We're hearing more rumours of Tesla reducing production in Shanghai also, even if it is for holidays. As for the other markets, though, there is not the same excuse. Germany appears to have quite a few in inventory on hand. They all appear to be long-range and performance models, so potentially from the German factory. There didn't appear to be any standard range versions of the Model 3 or Model Y, though. New Zealand also has inventory building up, where they also already offer a local subsidy of around $5,500. They were very popular for a while, but it may have been backlog, as the waiting list is now January there too. Plenty of inventory in the UK as well, with delivery times of just 2 to 4 weeks. It might have been a lot of these markets that may have had a massive backlog, and the bandwidth at which Tesla could deliver was too small that these backlogs built up. In addition to that, when a lot of these orders were made, the interest rates were lower. Now rates have risen and are potentially rising even more. Germany is still seeing really high inflation, and rates are going up a lot. This makes buying a Tesla that much more expensive, or any car for that matter. So there are 5 factors affecting demand here. 1, that we are going to be in a recession and consumer confidence will be low. 2, the cars simply cost more due to interest rates being that much higher. 3, Tesla's supply has increased significantly, making it harder to sell more at the same price. 4, they've exhausted backlog in a lot of markets. 5, there was a lack of supply from the competition due to supply chain issues. The demand was almost just a perfect storm, all pointing to Tesla, hence why they're able to raise the prices so much and see such substantial margins. We were in a boom before, and there were also supply chain issues. All automakers suffered in production as a result. There was a shortage of cars across the board. Car dealers were adding premiums at the point of sale. Tesla had no car dealers, so they were able to add premiums directly to the consumer. We had a lot of demand, but not enough supply. However, Tesla was a small enough company, making under 1 million cars a year or so. They also had many very talented people and were able to adapt quickly to correct issues like chip shortages. This then resulted in statistics of Tesla growing massively, yet the legacy autos actually dropping in sales. It might have looked like Tesla were taking their market share, but in reality, it could have simply been that legacy were not able to make enough cars. It was supply, rather than demand. And as Tesla was only producing a small amount, they were able to ramp up production enough for it to have a large percentage impact of growth. The growth was achieved with Chinese LFP sales. They were not able to make enough nickel-based cells. Giga Nevada had a limited capacity, and that takes a lot to increase cell growth. LG and Korea were supplying China with nickel cells, but also limited. The growth was easy with LFP cells, as they were simple to make. Eventually, Tesla started even using LFP cells in their standard range Model 3 in Fremont to save 2170 cells for the more profitable vehicles. Before this period, we were in a relatively normal market, and we saw only around a 4-week wait time for Model Y. That was at $50,000 price point. If we then enter a recession, then it's hard to judge what demand will be. We also don't know what level this recession will be. The fact is, there's a lot of debt in the world, and with high interest rates, it's crazy times. Something could break. We've not yet seen Tesla's demand in a recession, and the fact Elon is talking about they may have to run at a loss in a recession is bad. It's concerning. It would make Tesla's PE ratio look very high, which may be tough to justify in a recession. Elon was telling us that Tesla can weather the storm better than any company, but that doesn't mean the stock price will be stable through it. Elon says they will continue to grow through the recession and push the cars out, as at the end of the day, they will have full autonomy. Elon obviously sold a ton of shares which hurt the stock price dramatically, as he believes there is a recession on the way and wants to prepare for it. However, it is the shareholders that had to pay for that. This has scared me so much that I had to get my dad out of Tesla, currently at a lower price point than it's trading now, but he had his whole retirement in Tesla, as crazy as that sounds now. He still has enough to live on, but nothing close to the life he could have had. I know many of you are in similar positions. It's devastating and surreal to go from such a high to such a low. It was just that last drop from 160 to 120 that no one saw coming. So if Elon will continue to make cars, then he'll have to ramp up the new factories. It entirely depends on how bad the recession is, as to what the prices will be. Those factories need to be ramped though, or they'll start costing a lot to keep running, which may be what Elon means by running at a slight loss. If they can't ramp up the 4680 sales, then they may end up making standard range versions instead. Of course, they'll have a lower price point, so not carry as much profit to cover the costs, and perhaps fewer people can afford a long-range model in such an economy either. They could end up selling Model Y rear-wheel drive for around $30,000 perhaps. With the tax credit, there should be at least some margin. With it, it'll be about break-even, but they would still need to find enough sales for that. But if they cut production in Shanghai, perhaps a lot of those sales could be used. And there may still be the energy business to help out a lot too. It depends on what those margins end up coming in at. But anyway, at 10% margin, Tesla is selling a Model Y long range for around $45,000. And then there's the $7,500 tax credit on top of that, at least in the US. So again, it's down to the economy and what the actual demand may be for a Tesla in such a market environment. But with 10% margins across the board and around almost $4 billion from EV tax credits and subsidies of $2 billion for batteries and energy profiting $2 billion, then Tesla is still at an $18 billion profit for the year. But this would depend on Tesla ramping up the new factories still to a run rate of 90,000 a quarter each by the end of the year. They're currently at 40,000. But the cell supply is limited. Remember, Elon did say they could run out of 2170 cells next quarter, and 4680s only make enough Model Ys for about 13,000 a quarter at this stage. My estimates for prices at 10% are $32,000 for a Model 3 rear-wheel drive, or $39,500 before the tax credit, and $41,000 for the long-range Model Y. From Shanghai, the Model 3 drops to $29,000 and $33,000 for the Y, and $41,000 for a long range from Berlin and Texas. This is why I think they may have to resort to possibly using LFP cells in their new factories. This could be where Tesla struggled to make enough profit if they're looking at perhaps a market price of $35,000 for a rear-wheel drive Model Y. It might mean they become cash furnaces somewhat again. Just all depends on if they have enough demand. But if they can make around $90,000 a quarter with 10% margin, their net profits could still be $16 billion, with a forward PE ratio of 20. Whether that is high or not is up for you to decide. There may be some tough quarters on the way though, if production has to slow down due to cell supply. I'm not entirely happy with the progress of the 4680 cell production, and it's tougher waiting it out in a recession. Look, recessions are ugly, so do whatever you think you have to for you and your family. Right now, it feels like the exuberance has left the market. We just don't know how much of this has been priced in. So the fact Elon says that they could run at a loss would be a very severe recession. Tesla would have to drop their prices to crazy levels. It would start to get unbelievable if they're running at a loss. But this is what he said. The other reason I could see them running at a loss would be if they ran out of 2170 supply and the new factories became cash furnaces again. But you'd also think perhaps if Tesla dropped prices that low in China, then they're now competing with BYD prices, which you'd think would sell well. So like I said, it's just about the severity of this recession and whether you think there is one coming or not. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.